As fighting continues in Europe, tensions between the United States, Russia, Iran, China, and even North Korea are at the highest since the Cold War. It's clear that these tensions have an impact on the economy. Hello everyone, this is Matthew from therighttrader.com, and in today's video, we're going to be looking at how the stock market performed in World War II. Let's get right into it. The stock market is a crucial barometer of the health of an economy. It is a place where companies raise capital to grow and where investors can buy and sell shares in those companies. As a result, the stock market is a crucial driver of economic activity, providing the funds companies need to invest in new products and services. However, during wartime, the stock market can be a volatile place. Investors may become concerned about the potential for economic disruption and may sell their shares. This can lead to a decline in the stock market, leading to a decrease in economic activity. The US is no stranger to war. Having spent a projected $8 trillion on post 9/11 conflicts, this is a significant portion of the country's gross domestic product. So, how do wars impact the stock market and the economy? Experts in the field of security have their opinions, but the final impact on the stock market today remains uncertain. Nevertheless, we can investigate what happened in the past to gain insights about what we can expect today. In today's video, we'll look at how the stock market performed during the Second World War. Were the markets obliterated, or were there some surprising winners who made a killing during one of the world's most destructive wars? Let's look at how the economy was faring before the start of World War II. The big stock market crash happened on Black Tuesday, October 29, 1929. This event marked the onset of the Great Depression. It wasn't until 1933, only 6 years before the start of World War II, that the stock market finally began to recover. In fact, the stock market upswing would last until early 1937, just before the beginning of World War II. In February 1937, the stock market average was $3,575, a level it would not reach again until far after the war had ended. Interestingly, the valleys and throws don't appear in the usual places. After reaching a peak in early 1937, the market promptly began to decline. That was in part due to the many political scandals and changes that were taking place at the time in the United States. In March of 1938, the market crashed to a new all-time low. As part of his Anschluss goal to unify all German-speaking populations in Europe, Hitler annexed Austria on March 12, 1938. The Anschluss demonstrated Germany's aggressiveness and will to accomplish its foreign aims, and it all but ensured that the war would soon break out. The market bottomed out in March of 1938, just after Hitler annexed Austria. Surprisingly, the start of the conflict itself had minimal impact on US markets. The subsequent sharp decline happened in June of 1940 when France ultimately surrendered. However, it's interesting to note that there was no discernible decline following December 6th strike on Pearl Harbor. Instead, the market fell after Pearl Harbor due to Axis triumphs elsewhere. It wasn't until the spring of 1942 that the US stock market hit rock bottom, after the US and the United Kingdom suffered a series of humiliating setbacks in the Pacific following Pearl Harbor. From its pre-war peak in 1937, the market has fallen by 55%. Interestingly, a broad market upswing got underway following that 1942 low. The market rose in tandem with the Allied Army's battle successes. From 1942 until the end of the war, the market had various ups and downs, but overall, it moved in an upward direction. Compared to the American markets, the movement on the German stock exchange was much more intriguing. The ascent of Adolf Hitler was accompanied by a sharp decline in the stock market as investors fled to uncertain economic and political climates. Markets in Germany saw a spectacular bull run in 1933 as Hitler established his economic reforms and consolidated his authority. Rising stock markets in both Germany and the United States in 1933 reflected a growing optimism that an end of the Great Depression was near. According to the figure investmentoffice.com provides, the German market saw a relative sharp decline following the annexation of Austria, mirroring the pattern seen in the US stock market. However, when Germany began expanding and gaining military victories, the country's stock market began to soar. In fact, The German stock market reached an all-time high during the first surge into Soviet territory and then began gradually declining. As the tide of the war turned against Germany, the country's social fabric frayed and finally collapsed, and the market was destroyed once and for all. Germany's markets didn't reopen for many years after the war, and when they finally did, they had to start from scratch, attempting to meet the needs of a country torn apart by fighting and politics. When you know what to look for, World War II is written all over the stock market charts. Yet, the drumbeats may not be the ones you would anticipate. It's easy to understand why everyone was so worried in the period leading up to World War II, how the Allies stumbled early on, and how they eventually came back to victory. The proof is in the figures. It would be several years after World War II's conclusion before the markets recovered to their pre-war levels. The market didn't start to improve much until the mid-1950s and then exploded higher in the 1960s. Although the conflict did cause a decline in the stock market, it was not as severe or long-lasting as one might have imagined. As a result of the Nazis' command and control economy, the German stock market was intriguing but not easily understood. In retrospect, we can see how quickly Germany's fortunes improved, only to tumble precipitously in the end. It's true that the stock market may be a barometer for global events, but it also acts and reacts in ways that defy causal explanation. What about today's war? Can we foresee any clear economic winners emerging? Only time will tell for sure, but it certainly is worth looking into the past to gain some insight into the future of the stock market. Please share any thoughts in the comment section down below. They always provide an interesting conversation. If you found this video informative, let me know by leaving a like, and don't forget to